Hello there. Welcome back to Accounting Space. In this video, we want to look at the calculation of depreciation for vehicles and equipment. And we have to take note that we have two main methods of calculating depreciation that we are going to look at in this video. That is calculating depreciation using the straight line method, and also are using the diminishing balance method or the reducing balance method. So basically, those two main methods are the ones that we are going to use. So the difference between the straight line method and the diminishing balance method is that straight line method uses a fixed amount for calculating depreciation for over the useful life of a non-current asset. So we are saying uh, and the depreciation amount for the first year will be the same with the depreciation amount for the second year until the end of life of that non-current asset. So, but if you look on the other hand, in terms of diminishing balance method, we are going to see that the proportionate amount of depreciation for the earlier years of the earlier years of the useful life of that non-current asset will be higher than the depreciation amounts are in the later stages. You're going to see that depreciation amounts will be reducing as years progresses. The reason is that the method that we use to calculate depreciation using the diminishing balance method is we calculate by using a percentage, and then we multiply it by the book value or the carrying value, whereby the carrying value, we get the carrying value by saying the cost minus accumulated depreciation. So you are going to see that accumulated depreciation will increase as the years progresses, making the net book value or the carrying value to be lesser and lesser. That's why the a proportionate amount of depreciation using the diminishing balance method will reduce as years progresses during the useful life of a non-current asset. So basically, that's what we have in terms of those two main methods. So we have a question that we just want to look at here on calculation of depreciation. So we have a calculation of depreciation for the year of vehicles and equipment. So we are talking about for the year, we are talking about the current financial period that we have according to the question. We are seeing that our question is saying a pre-adjustment trial balance is a 29th February 2022. So obviously we are seeing that this is where our financial period is ending. Remember, our financial period should be 1 year. So it means if it's ending 29th February 2022, it will represent the financial year end. So it means it started a year before the date that we have there. So obviously this is going to be 1 March 2021. So this becomes our financial period. Very important for you to identify the starting date and the end date of the financial period, because you'd see that in some cases the calculation of depreciation will be requiring you to make a proportionate calculation in terms of the number of months that current asset stayed during the financial period. So you can only get to know about that when you have identified where your year is starting and where it's ending, so you can be able to calculate the number of months that non-current asset stayed in the business. So basically, this is what we have. Then believe that we are given a pre-adjustment trial balance is at 29th February 2022, which is given buildings, given vehicles, and vehicles. You are also given accumulated depreciation in terms of accumulated depreciation on vehicles and equipment. It's 1 March 2021. So the accumulated depreciation amounts were given at the beginning of the financial period. So you should take note. But the other balances that we are given February 2022 at the end of the financial period. So we have also landed buildings are there, but we know that landed buildings does not depreciate. We do not calculate depreciation for landed buildings since there is no depreciation concerning our landed buildings. So basically, that's what we have. Then we go to the additional information that is given now. The additional information that is now make provision for depreciation as follows, whereby you are given first point equipment at 15% of costs. In brackets, there is new equipment bought on 1 February 2022, valued 90,000 rands, and it was properly recorded. So properly recorded, what does it mean? It means the balance of equipment that we have here of 250,000. It was the balance after adjustment of the 90,000 rands of the new equipment. So basically, we are saying the 90,000 is inside is inside the cost for equipment, which is 250,000. So we can just take note of that. Then the second point is saying make provision for depreciation on the vehicles and 20% on the carrying value. So the carrying value, in terms of the second point on depreciation on vehicles, so this is a representation of the diminishing balance method. So this is the diminishing balance method of calculating depreciation. So it means the same thing by saying carrying value. We can also substitute with diminishing balance method. So this is our for equipment. So we can just go there, try to check the figures that we have. So we are going to say depreciation. Depreciation equipment figure that we are given. We are told that is 50% on cost. So obviously we go there and see in terms of the cost that we have is 385,000. So, but first of all, we have to know that the formula that we use using the cost method is percentage times cost price. So basically, that's the given it is 15%. But obviously, we are told that there's a new equipment that was bought on 1 February 2022, and we know that our year is ending 29 February 2022. So what does it mean? It means that our non-current asset only stayed for 1 month. But we also know that that 90,000 is inside equipment, which is 250,000. So we need to remove that 90,000 from 250,000 because it only stayed in the business for 1 month for February only. So we need the value of equipment at cost that was there for the whole year, and then we calculate it separately. And the one that came during the year, we also calculate it separately. Then we add them together to get the total. So on the calculation of equipment that were there for the whole year, we are going to say 15%, which is obviously, and then we multiply by brackets. We are saying the equipment that we have, the equipment that we have, yes, which is 250,000. So we put our 250,000. And then we subtract the one that came during the year, which is 90,000. Then we get depreciation for old equipment that were there during that were there for the way. So we are saying this is depreciation for old equipment. So we can just say represented by old year, so that we can see. Then from there we can now try to calculate and see what we get. So if you say 250,000 minus 90,000, you are going to get 160,000. So we are saying, obviously, we further calculate this, we are going to get your answer is at 24,000. So this becomes the depreciation amount for the one for the equipment part that was there for the way. Then we now calculate for the 90,000, which only was for 1 month. So we are saying for the new part, which came during the year, we are now saying, and then if you calculate like this, you're going to get the depreciation amount for the whole year. So what we need is for only 1 month. So we're going to say times 1/4. So we calculate like that. We see that the answer that we're going to get is 1,000. Then from there, we can now calculate total depreciation. Total depreciation, whereby we are now adding depreciation of old equipment plus new equipment. So we are saying 24,000, and then we add 1,125, 5,125. So basically, this becomes your final answer for total depreciation for equipment for the year. Then second part, we have for vehicles, and the vehicles, we do not have any additions in terms of vehicles which came during the year according to our internal information. So this one is going to be a bit similar. So we are saying now depreciation on vehicles. So okay, I just represent here by saying depreciation on vehicles. Whereby the formula that we use to calculate depreciation on vehicles, I will say percentage times carrying value, since it's the carrying value method or the diminishing balance method. So this is the formula that we use for the diminishing balance carrying value. It's a pre-calculation that we have to make, whereby after getting a carrying value, that's when now you say percentage times the carrying value cost of the vehicle minus accumulated depreciation, the carrying value. So we go there and see on vehicles we are given it cost is 385,000. So we are looking at the accumulated depreciation for vehicles 101,500. So by so doing now, we cannot be able to find our carrying value, whereby it's going to be 283,500. Then we can now employ carrying value. So in that case, we are now saying the percentage that you are given in the additional information for depreciation on the vehicles, we are given it as 20%. So 20%, remember, as a decimal becomes 0.2, so 1,500. So by so doing, we can just calculate to find the correct answer there. So if you calculate, you're going to see that you're going to get it as 56,700. So this becomes the depreciation that we have for our vehicles for the year. So remember, in cases of our questions, we be preparing our income statement or our statement of comprehensive income. So obviously, we need to transfer the total amount of depreciation for all the non-current assets. So we're going to add all the depreciation that we have in particular for this question. And then the total depreciation is the one that we are supposed to put under less expenses in the profit and loss account. So in that case now, we are now saying total depreciation, total depreciation uh, for the year. We are now adding the depreciation amounts that we got here. We got 24,000 for old, and then we got 1,125 for new. We added the two, we got 25,125 representing uh, total depreciation for equipment. So we're going to take 25,125 as our total, and then we add, and then the depreciation that we get becomes the total depreciation for the year for the business. So if we add there, you're going to get your answer is 81,825. So this is the amount. This is the amount that is supposed to go to the profit and loss or the statement of comprehensive one, and the one that is supposed to go to the income statement. So basically, this is what we have. So this is how we calculate our depreciation using the carried value method or the diminishing balance method. And also the cost method, which is the straight line method. So basically, we take note of that. So thank you for listening, and hopefully the video was helpful. And please take notes. Let's subscribe and share to our channel. And please remember this calculation of depreciation applies from financial accounting N4 to N6. So hopefully it's going to help us. Let's meet again in the next video. As for this video, I'm signing out.